Hey everybody, happy Friday. It is big jobs day today with the unemployment report, the BLS jobs report coming out earlier this morning. And I wanted to just record a video to kind of walk through some of the highlights. So the unemployment report came out today and the economy added 199,000 jobs in November. The market was expecting 190,000. So a little bit of a better jobs report for the economy than was expected. For those who are, focused on the mortgage real estate side, we really wanted to see a softer jobs report than this to really help push rates lower. And we didn't get that despite there being a couple of conflicting job reports earlier in the week. But at the close of trading today, the market's only up slightly as it relates to mortgage rates. So it could have been much worse as far as the damage done by this positive report. But I think a lot of that is because within the unemployment rate, there is some conflicting data. Now, on one hand, the report looks better than it really is because there were revisions to prior months' jobs reports, and they reported those numbers down 35,000 jobs. So they over-reported in prior months the job gains that actually happened after they were able to flush out the data. And on top of that, we had an additional 47,000 jobs added to this report from the auto workers as well as those in the film industry that returned to work following their strikes. So that, kind of tempered the report a little bit. But on the other hand, we did see a jump in average hourly earnings as well as average weekly earnings. And those two things suggest a stronger economy. Now, we don't know why those numbers jumped, but whatever reason they jumped, and that is an indicator of a stronger economy. So those two arguments are kind of pulling from each other, and as a result, I think the report was somewhat muted, or I should say the response to the report was somewhat muted. Now, obviously, it's really hard to tell which way the economy is going to go, and there's a rule out there called the SOM rule, which is a very reliable recession indicator that's designed to detect recessions long before they're actually called. It's still flashing yellow, but I think we have enough data at this point and it's safe to say that the Federal Reserve's assumption, and to be fair, I agreed with them, that a job loss recession was necessary to push down inflation appears to be the wrong call. And if it is the wrong call, then it means that the Fed probably has rates about 1.5% too high at this point because their rate stance is very restrictive as it is. And the Federal Reserve meets next week, so we'll continue to see, if they continue their hawkish stance where they're coming out and saying, hey, we're going to be here higher for longer. That would be very bad for mortgage rates. So we'll see if they say that, or we'll see if they start to acknowledge, some of the other data that's coming out suggesting that the economy is softening, and that would be good for mortgage rates. Mortgage rates have continued to come down this week overall, though, although not at the same pace that we had seen in prior weeks. The average locked interest rate is creeping down towards 7%, coming down from the highs around 8%. But I think it's really important to point out that this number you see on the screen, this is the average locked rate. This is not the average par rate. And for those who aren't familiar with that term, the par rate is the rate that you would get paying no points. And the majority of most clients in this market are still being forced to pay points to get those attractive lower 7, high 6 rates because investors are expecting for those loans to be very short term. They're not going to make a lot of money on them because they expect interest rates to decline into next year, and therefore those loans would be paid off via a refinance. So as a result, they're making their profit up front by charging points on those lower, more attractive rates. So if you're looking for a loan with no points, you're probably still in that mid-7 range for most scenarios. So hopefully you found this helpful. Hope you guys have a great weekend, and we'll talk soon. Thanks.